Let me know if this sounds like you. You've been day trading for a little bit, but you have not been able to find some consistency. You don't have a trading plan that works for you. You're always changing between trading plans and your strategy because you cannot find one that is consistent. In this video, I'm going to show you the trading plan that I use and what has helped me be a consistent trader. If that sounds interesting, then please watch until the end of this video. And let's jump on to TradingView. Alrighty, so the very first thing that I do is I look for a stock that I want to trade. So I jump onto TradingView and I jump onto the stock screener portion of TradingView and I remove all of these widgets right here. And the only one that I leave is market cap and pre-market volume. So for our market cap, we're looking for stocks that have a lot of shares that is being traded. So we want a market cap greater than 25 billion. And for pre-market volume, we're looking for a volume that is greater than 500K. So we're gonna have stocks that are being widely traded. Sometimes if you don't have enough options here, you can change it to 250K, so on and so forth. So when we so now we have Tesla and Apple. Those are the two options that are given to us. And just say we want to trade Tesla. So we jump onto Tesla's charts and I'll remove every indicator just like this. We'll remove every indicator and we will replay and go back to 9:15. So it's 9:15 in the morning and the first thing you want to do is decide what key levels are there for Tesla? That's our first question. Are there key levels and what key levels are there? So I jump onto the daily chart first. And the first thing that I use to find key levels is my fib levels. So auto fib retracement. These find some key levels for us. And when we click this, we can see that the closest one is all the way up here at $166. So this isn't really helpful. Next, I jump to my 5-minute chart and we find key levels using this indicator called support resistance dynamic. So it's this one right here. When we click on this, it finds support and resistance levels for us, key levels. So I like to chart those. I go here and make some horizontal lines at these key levels in pre-market, and then I hide this indicator. So now we have some very important key levels that we can work off of in our trades. And we can see some of these levels are our pre-market highs and lows. Now, the next thing that I like to do is I look for my next indicator, which is my volume weighted average price. And when I click on that, I like to change it just a little bit. I like the cloud to be just a little darker. So this is our VWAP levels. The bottom of the cloud is our, how do I say it, is our overbought areas, and the top is our oversold areas. So when we get to the bottom of this, it's more of a buying area, and the opposite is the same for the top. Now, I trade on the 1-minute charts, and my final indicator is volume. Now, reading price action is all about using our volume and our candles to help us trade. So if we want to take a long trade, we have to make sure that our candles and our volume is telling us that the market is going to be going to the upside. And vice versa, if we are looking for puts, we have to make sure that our volume and our candles are telling us that we should expect to go to the downside. Now, so market opens just like this. I usually don't trade the first 5 minutes. So our market opens up, we can see it's 9:35, and now we need to decide this move up, is it a true move up or not? Is it the market makers tricking us, or is it actually a bullish market? And how do we know this? We know this with our candles. So we can see this first candle. This is how we read candles. we can see that this candle opened up here because it's a green candle. So it opened up at the bottom and closed at the top. It opened up at 119.97 and it closed about here. And when we look at the wicks are not too huge, which means the market, this candle was more buying pressure than selling pressure. We look at the next candle, and this is another thing that we can do. If the market is telling us that there's a push up, there needs to be volume that pushes this up. So let's pay attention to here, the volume, the number that shows us volume here, and the candles. So when we look at this second candle, if we look at volume, volume says there is 873,000 shares of volume. If our next candle has more volume and it's also green, that means the push is legitimate. It's a legitimate bullish move. And when we look at the next candle, there's 1 million shares of volume. And when we look at the third one, there's 1.1 million shares of volume. So this push is legitimate. Now, will I enter a area to buy calls? Because some people might see this and say, oh, wow, this is bullish, let's buy. No. Why? Because there is a resistance area that's coming up. So you're going to be pushed back down. This is a hard area for this stock to break through. And when we look at the past, we can see resistance, resistance, resistance. So why would you buy now? Wait for a push back down. And this is why we use VWAP. We can use the VWAP area as an area. If it pushes back down to this, I'll buy. If it pushes back down to this, then I'll buy. So now we just wait. It reaches that resistance area, and now what do we see? We see a red candle come in. When it's getting close, we see another red candle come in, and then we see our volume. So right here we have 1.196 million shares of volume, and it's a green candle. But the following one, the volume drops. There's less buyers that are trying to push it above. Some people are taking their profits. That's how you read price action. You look at the candle and you look at the volume and you look where you are. Are you in a resistance area? Are you in a support area? So now what happens? We push back down. And this is where I bought my first set of calls, because I know that mostly there is buying pressure, but I'm looking for an area to buy in. So I wait for this area, and my next set of buys would be in this area. So I buy in, and I can see that push happens. You can take a partial here. You can sell at this 123.40 range because it is that resistance area. Trading is all about patience. You don't want to buy and you don't want to sell until you are at a zone that you told yourself you would buy or sell at. Right now, I won't just buy. I'm looking at the candles, and right now I can see that there is volume that wants to push this down. The volume is decreasing, but there is volume that's pushing this down. I'm not going to just jump into this trade. Now I can see, okay, maybe it is finding support at the bottom of this volume, at the bottom of this VWAP. Now I see a candle. This has 280,000 shares of volume. I see there's a candle here. The volume is doubled. I see another candle here, 376,000 shares. That's more volume. That's how we read volume. We see volume. You need volume to push something up, and you need volume to push something back down. So now you're just asking yourself, is there enough volume to push this greater? I probably wouldn't buy here because I don't think the volume is strong enough right now. Now we see this candle come in. and we can see this is a large green candle. And now I might consider, okay, they're not able to push this below this level, so if it comes here, I might buy in. And we always chart levels as the market is trading intraday. Intraday, we always make some levels for yourself during the trading hours. It might not be the same levels as before, but make some levels. This is a key level. This is an area it's bouncing up and down from, you know? Now we see, what do we see here? Big green candle, 300,000 shares. We see 320,000. We see 362,000. Now I'm jumping in. Now I'm like, okay, this volume is okay, 500,000. Now it wants to break above. Look at this candle, 800,000 shares. And it goes to the end of the trading day. So that's what trading is all about. It's about finding key levels, and seeing what the stock does at those key levels, and using VWAP and volume. But none of that matters if you are not reading the volume candles. You look at the specific candle and ask yourself, is this a bullish candle or a bearish candle? Because the candle tells a story. If a candle is fully filled like this and the wick is very tiny, there's very little selling pressure, there's more buying pressure. And vice versa, if the candle is red, that means there's more selling pressure. Read the candles, read the volume at key levels, and then make the trade. And just know that even then you can be wrong, and if you are, have a stop loss. What would my stop loss be? For me personally, I would take a stop loss if, just say I bought some calls here. For some dumb reason, I bought some calls here. If I have a 5-minute candle that closes below this VWAP, I'll sell. If I bought some puts, just say I seen this nice this resistance area, I seen this red candle, I bought some puts here. If I have a 5-minute candle that closes above this resistance area, I'm gonna sell. And you stick with that. You immediately sell with no questions asked. That's how you stay profitable and you don't blow your account. Okay, so if you want, we can look through one last example, because I also traded SPY on Friday, and I'm going to show you another trick also to our trading that is very, very helpful, that is going to change things for you. So if you go right here and you change from extended trading to regular trading hours, you can see a few things. So now let's replay. And let's replay to this time. Okay, what another thing that is very, very helpful is reading gaps. So right here, there's a gap in the market. Right here, there's a gap in the market. Don't worry about those small wicks, but there's gap in the market here. There's a gap in the market up here. Gaps are very, very helpful because gaps work as support areas. If a market comes down to here, this can work as a support area until it's broken, and vice versa. So now let's go back to regular trading hours, and I'll show you this trade that I was able to take on SPY. So we see SPY came down to this support area twice. So I was able to take the second trade actually when it came down to this support area, and I seen a green candle come in. It was able to run. I knew that it would work as a support area, and vice versa for the puts up here. And now what do we see? Now it has filled that gap, and once this stock has filled the full gap, this is useless now. The gap has been filled. This is useless, but this gap is still of use. If there is a 5-minute candle that closes, and it starts showing some bearish sentiment in this area, you can expect this to fill this and to be a bearish move now. So chart your gaps and your key levels, and things will be so much easier for you when you're trading based off of those levels and you're reading volume. So that's all for you guys today. I hope you guys enjoyed this video and that it helped with your trading. That's what I do every single morning that helps me with my trading. All I do is I find my key levels, and then I incorporate my volume and my VWAP. If a support area is in the bottom of that VWAP area, I'm looking for calls, but I'm letting my volume tell me if it's an area for calls. If I'm at a resistance area in the top of that VWAP area, I'm looking for puts, but I'm gonna let my candles and my volume tell me if it's an area that is actually going to the downside. All right, guys, peace.